credit may feel like the end of the line when it comes to buying a home. Maybe you've been told you need to give up on that dream or that you should be exploring other options. While having bad credit can delay you from getting your home, it doesn't mean that you can't make it happen. Hi, I'm Bethany, and I'm a realtor with Keller Palmetto in Columbia, South Carolina. I've been helping home buyers for more than 18 years now, so I know exactly what you need to know about buying a home. But first, do me a small favor and like this video, and if you want to make your home buying experience a lot easier, keep listening, because today I'm going to tell you steps that you can take now to improve your credit so that you can finally stop renting and become a homeowner. Let's first talk about how credit impacts your home buying journey and experience. Your credit profile plays a really big role in the home buying process, but also a lot of other things in life that involve monthly payments. It has nothing to do with how much money you make or have. It's all about how you borrow, spend, and pay back money. How responsible you are and reliable you are to pay the money back and to pay it on time. How responsible are you with how much money you spend? The higher your credit score is, the more favorable lenders and service providers are going to be toward you, and they're going to offer you better rates, waive or reduce any deposit requirements, and you're going to have access to more loan programs that are credit-based. A good example would be 100% financing programs. They usually require scores of 680 or higher, and utility providers, they'll often have deposit requirements if you do not meet a certain credit threshold. And your credit profile can even impact your premiums for things like car insurance. Click like if you knew this already. And it all boils down to the better your credit, the more money you keep in your pocket. Improving your credit to buy a home. Let's get into some of the factors that affect your credit where buying a home is concerned, and what steps you can take now to get yourself in a much better position to buy a home. If you are a first-time buyer who doesn't have any credit and you don't think that you can buy a home, be sure to listen to the end, because I have some special tips for you too. The first thing you want to do is go online and get a free copy of your annual credit report. I recommend going to annualcreditreport.com, where you can receive a copy once a year for free. And what you want to do is you want to check for any errors, false claims, actual credit problems that you need to fix, or possible identity theft, because identity theft is very real and it happens a lot more often than what you realize. You also want to know your credit score, and when you're buying a home, you really want to aim for at least a 620 or higher. If it can be 680 or higher, that's even better, because the higher your credit score, the lower your interest rate is going to be, and the higher your credit score, the more loan options you're going to have available to you when you're financing your purchase. The interest rate really matters with your monthly payment. You can go to any of the 3 credit bureaus, TransUnion, Equifax, and Experian, and you can get a copy of your credit score from there. You're probably going to have to pay a small fee, or you could also go to myfico.com and you can get a copy of your scores there from all 3 bureaus for a small fee. Please do not rely on services like Credit Karma to give you accurate numbers. A lot of times they can easily be off by 30 to 50 points, and that can be really shocking when you eventually speak to a mortgage lender and you find out your score is not quite as high as what you thought it was. I also strongly encourage you to get pre-approved at least 6 months to a year before you are ready to start looking. And it's because you need to know up front if you need to work on anything to be ready to buy a home. That could be anything from paying down some debt to disputing something on your report, or maybe even saving a little more for your down payment. If there is something that you need to work on to get your credit in the best position possible, it takes time to put the effort in to do those things. And then once you've done them, it takes a few more months for that to register with the credit bureaus, and possibly a few more months after that to then impact your credit score in a positive way. The second thing you want to do to make sure that your credit improves is to pay your bills on time. And you need to have at least 12 full months of on-time payments. And this absolutely is a factor in your credit history and your score. If you miss a payment and you're late, unfortunately, the clock is going to start all over again, and you need to start back counting with month 1, 2, 3, and 4 until you get to another full 12-month period of all your loans and all your payments being made on time. Let's move on to number 3. Let's talk about how we handle our debt, and there are several components to this. Paying down debt is one of them, and we want to make sure that your credit card debt is 30% or less. You want to have 30% or less of a debt to credit ratio. So if you have a credit card with a $1,000 limit, you don't want to carry more than a $300 balance on it. And when we pay off debt, a lot of focus goes into paying one card at a time, starting with the highest interest rate first. And that is a great strategy to get out of debt, but it isn't the most effective in boosting your score when you're getting a loan. So instead of trying to pay off one card at a time, you want to pay them all down to a 30% or lower balance, and then work to pay them off one by one, starting with the higher interest rate first. And as you pay things off, you do not want to close out any of your current cards without talking to your mortgage lender first, because a lot of times your score is going to have a component that factors in the length of your credit history. And if you end up closing out one of your older accounts, it can actually drop your score and hurt it. We also do not want you to create any new debt. Do not go out and get any new credit accounts or car loans or do any kind of balance transfers. We don't want to open store cards or take out personal loans, because that could potentially hurt you when you are trying to buy a home. The fourth thing we want to keep in mind is you do not need or want to have your credit pulled too often by other people. If you do it yourself through annualcreditreport.com, it is not going to have a negative impact on your score. You can do that for free once a year with no impact. But if you're shopping for a car or shopping for a home or making inquiries for new credit cards, those are constantly going to hit on your credit report, and it can pull your score down. We know that you don't want to create any new debt, so we really don't want to have people pulling our credit unless it's a mortgage lender helping us get pre-approved. When you're just getting started, a lot of buyers think that you have to go ahead and find the very best lender right then and there, and they'll have a lot of different people pull their credit, and you do not need to do that. You only need to let one person pull your credit and formally pre-approve you. If you are already under contract and you're shopping your mortgage rates and programs within like a 1 or 2 week window, it is perfectly fine to talk to multiple different lenders and have them pull your credit. That is fine. That is not going to have a negative impact on you. What is harmful is constantly having those hard pulls over extended periods of time. What if you're a first-time buyer with no credit at all? You can build your credit. You can buy a home, and you can start doing it now. Lenders typically want to see at least 3 trade lines or accounts to qualify for a loan. So the first thing you want to do is make sure that all of your utility bills, the power, the water, your cell phone bill are in your name. Make sure your car loan and your car insurance are in your name too. A lot of younger first-time buyers might still have some of these items in their parents' names. Some lenders for some loan programs are going to be able to use those utility bills and your cell phone bill, maybe your rent, your car loan, your car insurance, to meet that requirement of 3 trade lines and establish a good faith credit history for you so that you can get pre-approved. If you do not have any of these things, or if it's just not possible for you to get them put in your name, another option is you could get a secured credit card directly from wherever you bank. You can do it for a minimal amount, like $500, and only use it for your routine, everyday, weekly essentials like gas and groceries. This is not free money. You do have to pay it back, so it's a good idea to keep that credit limit minimal so it's easier for you to pay it back every month. Your credit does not have to define you, and you have an opportunity to improve your score and be in a stronger position to buy a home and to create stronger financial security for yourself for the long term. I know that you can do this for yourself, and I know that it might still feel scary, but it does not have to. Click the video on the screen if you want to know how to get over the fear of buying your first home.